It's Fed Day, a big day. Also, on the ADP report, it came in a little hotter than expected. What does this mean to your investments? We're going to cover these questions and many more on today's Market Minute. The highly anticipated Fed meeting that takes place today at 2 p.m., and there's going to be a press conference at 2:30 this afternoon as well. There'll be several reactions to this. Initially, there'll be a knee-jerk response to the actual rate hike. We're anticipating a 0.75% increase in the federal funds rate. What does this mean for you? If you have credit card balances, that type of thing, they're tied to prime rate, it'll be exact amount, 0.75 increase in your credit charges and your interest rate. However, mortgages, it's already baked in. For example, interest rates are already set on the high sixes right now. So that's what we're seeing, and that won't sway the market at all. However, the press conference could swing the market heavily, depending on what they say about reducing the balance sheet, because the Fed has purchased bonds in the past that they allow them to expire or begin to sell them. It could increase the supply, and with minimal demand on those lower interest rate coupons, that could increase interest rates. So we want to watch the comments very closely. The ADP report came in hotter than expected, which is usually a precursor of what we can expect in the jobs report this coming Friday at 8:30 a.m. So a couple big news items coming out. We're going to float into the Fed meeting. We're in the mortgage industry, so we know that what the Fed's going to do. But when the comments start to fly at 2:30, we're going to watch very closely if they're more hawkish or more dovish as far as future interest rate hikes. If you're a realtor and you have loans in process with your borrowers and they're purchasing a home, you want to float in today's meeting and lock if the comments are more hawkish. In other words, they're going to continue to increase rates at the same pace. However, it's highly anticipated the next hike in December will be a 0.5% increase. Long term, and our stance hasn't changed, as recession information starts to come forward, we see that the brakes are going to be tapped a little bit, and we're going to have a look-see to see how much these rate hikes have indeed impacted the economy. It's certainly slowing down. Every indicator is that it's slowing down. So we're going to see what that looks like on those comments. So be tuned into that press conference at 2:30. If you found this information useful today, be sure to drop a like below and to subscribe to our channel. For our most recent market minutes, you can go here, and to find our lessons in lending series, we talk about the process of getting a mortgage right here in Florida. You can go right here. My name is Brent Starts with Unitas Lending, and this has been your Market Minute.